Hi everyone, Frank DiTomaso here with my weekly market update. This week I want to talk about the increasing unemployment rate and how it's affecting the housing market. We've been getting a lot of questions about this from our clients and colleagues in the industry, so I thought I'd share some interesting facts with you. Let me start with this. As of March 13th of this year, there were 7.1 million unemployed Americans. If you look at the graph, you'll see that the unemployment numbers have increased every week since. As of last week, over 26.5 million have filed for unemployment, according to the U.S. Bureau of Labor Statistics. That's roughly 33 million unemployed Americans right now. And it also means a real unemployment rate of 20.6%. That's the highest level it's been since 1934. So it's logical to think that there would be a direct correlation between unemployment and home sales. In other words, you would think that if the unemployment rate went up, then home sales would go down and vice versa. But take a look at this graph. It compares unemployment to home sales. When you look back at the research comparing the last 30 years, beginning in 1989, that direct relationship that we would think would happen doesn't really happen. The blue and gray bars represent home sales and the yellow line is the unemployment rate. So if you look at numbers 1 through 4, and I'll kind of talk through this. With number 1, 1992 and 1993, unemployment was rising, but housing sales were going up too. And again, if you go to number 2, in 2000 to 2003, you'll see that unemployment began rising again. But then look at housing sales. They went up too. Now, if you look at number 3, 2007 to 2010, it's in gray because yes, you'll see that unemployment started rising again and home sales went down. And this is the relationship that you would expect to see. However, this was in our housing crash at that time. And if you remember, lending standards tightened up significantly even beyond the housing crash. So it's one reason to believe that that's an anomaly. Then if you look at number 4, the unemployment was falling between 2015 and 2019, but home sales were relatively consistent at the same levels. The bottom line here is this. The impact of the unemployment rate on home sales, based on this historical data, doesn't seem to be as strong as we would think. It also gives us strong belief that once this pandemic is past us, home sales will continue to increase. I want to thank you for watching this week's housing market update, and be sure to look for next week's update as I discuss April's housing stats. That's going to be interesting. And if you'd like to view any of my weekly market updates, click on the link above and visit my company website where you'll also see all our property listings, video tours, and my podcast, Real Talk. Stay well and stay safe.